Worldwide markets this week, stock picks for the Cristal and Moneyweb stock challenges. Gold, man, 5,000 already. The Rand, fled the zone, hello Greenland, and how that actually helps the Rand. I'm Simon Brown. This is Worldwide Markets, episode 663 for 28 January, and we are recording late Tuesday afternoon. Worldwide Markets, powered by Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Standard Bank, thanks to Shyft. So I want to come to the stocks. We'll get to that in a bit. But so it wasn't on my plan to talk gold this week because I thought gold was going to be boring. But it has powered through, the operative word being powered. To be clear, I had $5,000 on my bingo card for 2026. I didn't have it on my bingo card for January, but there are a couple of things that are happening. We'll touch on them. So, as I say, gold likes to consolidate, then it likes to run, and when it runs, it does go with a fair bit of steam. If we think back to, was it last year? Yep, when it started to run in August, 2, 3, 4, 5, 6, 7, 8, 9 green weeks in a row before eventually it pulls back and sort of says, yep, okay, done enough running there. So not unusual to see big moves in gold. But what's the story here? Well, there was Davos, there was all of that sort of craziness that was happening. But I think the biggest story is American citizens being killed in the streets in Minneapolis. I mean, that is a bad image. And to be clear, things go wrong sometimes and maybe somebody dies, but the response from one half, well, that was just, the world was just like, wowza. And gold was the clear winner. I said before, there's also in many senses, there is a flaw to the gold price because this looks like speculators, right? This looks like folks coming in lately. I've got a surprising number of messages just this last week, 10 days saying, should I be buying gold? And I'm like, yo, I did a presentation June of last year when gold was 3,200 saying that this was maybe a good time to buy. Would I be buying it over 5,000? I mean, I don't know. If it goes to 10, sure. But if it's going to 5.5, not so sure. But certainly we're seeing a lot of speculative fever. We have got the World Gold Council. I think their report is out this week. I think I interviewed them on Friday on my Moneyweb show. We'll have the full year's data and we'll get a sense who was buying. Certainly some central banks, but I think there's a lot of private individuals in there at the same time. And then, of course, the Rand. So, I mean, I did my presentation last year, was it second week of December, position your portfolio for 2025, and I said the Rand will be stronger than 17. Which, sure, I mean, at that point it was 17.30 or so. Well, we got under 16 on Tuesday, Monday. We currently, as I do this, we are trading at 16 and fractions, but we can call it 16. Next stop, 1550, and there somewhere between 1550 and 1450 seems to be the consensus on my charts and everywhere else. But here's a fun theory which comes from Tom Robbins on the Twitters. And he says, hang on a second, is the Rand almost a counter indicator to the chaos that is happening? So every time things go horribly ugly with either Trump threatening tariffs, and he's now threatening 100% tariffs on Canada if they do a deal with China. It's like the schoolyard kid who takes their football home and says this game's over because, I don't know, whatever the case is. The point being is that whenever markets get rattled, they're not running to US dollars as they once did. I'm sure there is some run to US dollars, but the 10 years stayed broadly at 4.2%, running to gold. And when gold runs, our Rand strengthens. So the Rand is almost an inverse correlation to the chaos that is happening in the world, which is frankly, a wild place to find ourselves. Just earlier Tuesday morning, we also had an announcement from India and the European Union. They have signed a trade deal pretty much in about 90-odd%. In fact, I think in some cases, in the case of Indian goods, 99%. It's going to be scaled over a couple of years, goods from India into Europe. There are limits, for example, on how many vehicles can be exported or sent to Europe. But they've essentially created almost, a 2 billion person, not as big as that. India's maybe 1.5 billion. Okay, an almost 2 billion trading bloc with pretty much no tariffs. Fun fact, these talks were apparently started back in 2006, taken 20 years to get to this point. To be clear, the work's all been done in the last year, probably even less than the last year. There are issues. I mean, India's a big friend of Russia and Putin and the like. But what we're seeing is the move away from America. No surprises. I mean, when there's a crackpot, you can wake up and do a tweet at 2 o'clock in the morning, tariffing your country. There is no way that you are able to do any form of anything. And then, of course, China as well is also being left out of this, which I thought was quite interesting because, as you said already, China had what 1.2 trillion US dollar budget deficit last year. China is absolutely been one of the winners on these Donald tariff nonsense. We have our first power hour for the year, 19 February. It'll be at 5:30. It's tax-free investing. It's ETF revolutions. There are a number of ways we can be tax efficient. Donations, Reg 28, interest, tax-free accounts, etc., etc. You can either attend the webcast, you can attend live in person, justonelap.com/events for more information and booking details. So there are two stock picking competitions. The first is the Cristal Challenge, which I mentioned last week. This is David Shapiro, Sasfin Securities, link in the show notes or Google it. Cristal, of course, like the champagne, so Cristal. And there you pick 5 stocks. It runs from beginning of Feb to end of October, and whoever gets the best percentage gets a bottle of Cristal. And I think an iPad as well. And last year, 3 guys all picked the same 5 gold stocks, and they both got a bottle of Cristal and a iPad. The iPad from my broadband, if memory serves. And then the Moneyweb one, there was always way back in the day, it was a Moneyweb one. Hilton Tarrant used to do the radio show in SAFM, and towards the end of the year, he would ask his guests for a stock for the next year. And then he would open it to the broader Moneyweb community, and whichever stock did best would sort of be the kudos. Slight change here. There will be 5 stocks for Moneyweb as well, but they run from end of Jan through to end of December. So there's an extra 2 months at the end, and that one you find at moneyweb.coza. Nice and simple. So I am going to enter both, and I've got a little bit of a strategy here. There is a small problem I have, and that small problem is that if I win the Cristal one, which I came second once, but there were only, I think, 6 of us. It was the first year. I get a bottle of Cristal. If I win the Moneyweb one, I think they're going to call me staff and give me nothing. I don't know. I'm not sure. I haven't read the T's and C's. But what I'm doing here is I'm going to have 3 banker stocks. In other words, those 3 stocks will go into both competitions. And then I've got 2 stocks extra for the Cristal and 2 stocks extra for the Moneyweb. So there'll be some big overlap and then a little bit of difference. In part because I just wasn't sure which stocks to pick, I suppose, is the honest truth. But so let's kick off. The first one I'm going with is I am still bullish commodities. And so if you're bullish commodities, I can't pick ETFs. So how do we best express a commodity bullish stance? We buy some shares. I'm picking Sibanye-Stillwater. I know it is more than 5x up off those April lows. But they've got 2 things. They've got some gold in there, and they've got some PGMs. Those PGMs are platinum and palladium, because platinum is at highs, palladium is not yet at highs. The highs for palladium are north of 3,000. Those come, I think, from 2021. So I'm taking Sibanye-Stillwater as one of my bankers. I know it's trading at all-time highs. Why would you pick a stock at all-time highs? Well, because so is gold at all-time highs, so platinum at all-time highs, and if rhodium and palladium also go to all-time highs, this stock has more upside. We'll also get a ton of dividend as they pay down debt. The trick is the timing, right? I've got to enter this competition in the next couple of days. They're going to take it from close on Friday, and I would like a very, very big pullback between now and then. I don't think we're going to get it. But anyway, Sibanye-Stillwater is my first pick. My second is Purple Group, and that shouldn't surprise anyone. I hold Sibanye, I hold Purple Group. The story on Purple Group is very well known. They have now over 1 million clients. They now also charge an admin fee, which means that clients are more profitable. Their non-trading revenue is about a half of their revenue these days, which is fairly significant. Bull markets people love because they buy a share, it goes up, they tell everyone at the buy, everyone else wants to buy shares, they want to buy more shares. People love bull markets. Stockbrokers love bull markets. Again, it's pulled back a bit. It got as high as, what is that high? Back in October, it actually got up to 274. In early Jan, it was 265. Down at 242 at this point in time. The pullback to R2 was not unexpected. That was a nice entry point. So Purple is my second banker. And then my third banker is Afrimat. Afrimat bought the Lafarge business, the cement business, and they are masters at buying businesses and making them work. The Lafarge was a big bite. The problem with Lafarge also took, I think, almost a year for Competition Commission approval, and during that time, Lafarge just got frankly worse and worse. But we've got a stock here that I think is going to, they've still got some anthracite issues. I get all of that, but I think Lafarge is well positioned. And if we are going to do the 1.5, maybe even 1.8% GDP, to which, let's be clear, that is not either of them a particularly exciting number, but both are well up on the 0.5 or so we have been doing for the last decade or so. If that starts to happen, Afrimat incredibly well positioned. And I think at this point in time, they are cheap. Yes, they've got debt, but that debt gets very quickly paid down. That's part of the whole point of Afrimat, is a very cash generative. Iron ore, it doesn't thrill me, but the price seems stable. It's sort of in the 90s, so they're happy with that. As I said, they've got some challenges with the chrome furnaces shutting down. That has hurt them, but the Lafarge business is the biggie. And we've seen their construction section do incredibly well, and I think Lafarge can add to that. So that would be my third. So those are my three bankers. We've got Sibanye-Stillwater, we've got Purple Group, and we've got Afrimat. Three bankers. And then I need four more stocks. And I'm looking for sort of two kind of borings and two kind of maybe a little bit edgies. And I think it's important that the edgies are stocks that I hold. So on the edgy space, and I'll put one each of the edge into each of the different competitions. I haven't decided exactly who gets which. I'm going with Colgro M3. This is one I have called before. I hold it. I've held it for a while. I have taken some profits. I've got back in. I am sitting there. I mean, this is a stock that I first traded all the way back in sort of sub R1 in around 2011, 2012. And now, of course, it's, what do? They build houses. What does South Africa need? We need houses. We need houses galore. We need houses until they're coming out of our ears, and then we still need houses. And that's not unique to South Africa. That is true other parts of the world as well. But of course, we're looking at South Africa here. The easy entry was the breaker through sort of R3.30 and some change. It's sort of got a strong support trading around the 470, 480, 490 level, which is, it's at the bottom end of that right now. It is fairly illiquid, but I expect them, they've got Ben Pierre Malherbe back as CEO. He was CEO way back in the day. Then we got Driekus Latergaan. No, forget this. Not important. Ben Pierre is now back again. And they, for example, 2 years ago, they pulled back a whole bunch. Sorry, 2 years ago, because of elections, they worried around that. We'll see if that has any concerns for them again with another election year coming up. That they didn't experience any violence during the national elections of 2024. 2024, yeah, it's elections. We have so many of them. And now, of course, we've got local government probably mid-November of this year. I think the company's looking good. It is incredibly cheap. If we look at simple things like price earnings, it's at a 3. Its price to book is a bit skewed. It's 0.3, but that's a bit skewed because they've got a land bank. They got the giant project at Bank Global. That is going to suck in a lot of upfront capex, and then they can start sort of building on top, and then they'll start getting revenue from it. But they've got the memorial parks as well. I like it. 1 year might be a bit of a short-term view here, but in this point, I'm happy to take it. So Cogro M3. My other one is Richmond. And I picked Richmond last year. And then I got a little bit shafted because shortly after picking it, it absolutely jumped and went crazy. But it's not massively expensive. Its mean PE is around 27. Its current PE is 24. It is sitting on a very, for Richmond, chunky looking dividend yield of around 2.1. That dividend yield is off. Actually, it's okay. I would have put the Richmond dividend yield typically at a lower rate, but according to this, that's not the worst that we've seen that there. And it had a really, really good update, which the market didn't like. And I think that then gives me opportunity. And I was quite happy when I saw the update. I was like, because last year I picked the stock early in Jan, and then the update came and the stock ran 15-20% before we started. But this year, the update was excellent and it did the inverse. The stock collapsed on a really good update. The thing with Richmond, I appreciate input costs, gold costing a little bit more, but how much gold really goes into it? I mean, their operating margins are on the 60-odd%. I mean, they are just all about the status more than anything else. Rich people remain rich. With stock markets at records, people feel richer. If stock markets can remain at or around all-time highs, and I see no reason why not, lots of reasons why things could go wrong, but I'm not predicting crashes, they're going to be out there buying. So I think Richmond most definitely. Another one for me is Lewis. I've had my eye on this one for an age. I finally have a position in Lewis. And they are another good trading update from them. The stock has been running. I should have bought it back at 70 in October. I didn't get as cheap a price as I would have liked. But this is a stock with about a 9, almost a 9 dividend yield, a 6 price earnings. Its most recent trading update, which came out Tuesday morning, was again strong. Lewis is never going to shoot the lights out. But what we do see is shares outstanding. They keep on buying back their shares. So the number of shares in issue has almost halved in the last decade, and that benefits investors. Nice. I mean, that is almost in a sense, a safe pick in many senses. And then my other speculative one, Mr. Price. Yes, looking at you, Mr. Price. I am not convinced about this, but so we know the story. Mr. Price doubled in 2024. It almost, in fact, it practically halved in 2025. And a lot of that was thanks to the deal where they are going off to buy assets in Germany, and the market hated it. I struggled to find anyone who liked it. The thing is that, look, the deal's going ahead. They're doing a capital markets day in February. If you don't like it, you can exit the position, or you can say to yourself, okay, the market absolutely hates this, but the market has punished them. The market has marked the stock down to levels that, frankly, exclude the deal. So if it's a horror deal, well, okay, they've got some debt on their balance sheet, but they're cash generative, and all will be fine. I put fine in inverted commas. Anyway, I'm saying Mr. Price as my fourth floater. So 3 bankers, Sabania, Purple, and Afrimat. Floaters are Cogro M3, Richmond, Lewis, and Mr. Price. I have to decide which of those 4 goes where, but that is my picks for the challenges. As I say, respectively, we've got both the Cristal challenge and the Moneyweb, and I'll be putting those in for both of them and getting exposure. And look, I hope I win both, but best of luck to all, I suppose. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Standard Bank, thanks to Shyft, thanks to you for listening. We'll be back again next week. Until then, my name is Simon. Look after yourself, and as always, if you can, look after somebody else as well. Cheers all.